All right, folks, welcome to the higher time frame market forecast going over DXY, GU, and EU. So we're going to start from EURUSD first, as always, because it's a lovely pair. And we'll go to DXY, then over to GU. On EU, we have a 6-month range. It's low, high, range low, range high. Projected range low, we expected it, and giving a model 1 confirmation on the monthly time frame. Now we're headed to go to the range high, which is over here. Now going into lower time frame, on a 3-month time frame, as you can see, the 3-month time frame gives us the 3-month time frame gives us the seasonal tendencies, seasonal bullish, bearish. Is it going to be expansion? Seasonal tendency, which lasts about 3 months. The seasonal tendencies change every 3 months. So for the past 6 months, we have been expanding, but before that, we have been consolidating. So what am I anticipating? I'm anticipating, since we are at the 50% of the range of the 50% mark or above it, we could potentially anticipate a false top, then see another rally to the upside. So I'm expecting this next 3-month candle. I'm expecting this next seasonal tendency to be bearish, not bearish, to be a consolidation. Because after expansion, it births retracements / consolidation. I'm happy to see a consolidation with retracement. So that's what we have in the higher time frame. On the monthly time frame, we have a monthly ERL to IRL. Will the market go down here? Highly likely not. So I'm going to go scale into the lower time frame to participate even more. On the lower time frame, we have a weekly CRT to the downside. We as well have a weekly IRL, ERL to IRL, which could be high likely this. And probably wondering, well, why this low, bro? Why this low? It's this fair value gap right over here. It's inside this weekly CRT. Since this fair value gap is inside this weekly CRT, and market is going from weekly ERL to IRL, or potentially this IRL, because what the market is potentially going to do is that it's going to come back lower, disrespect this fair value gap, and retap that fair value gaps, and then eventually go from a weekly IRL to ERL, tap the ERL, eventually go from ERL back to IRL, inverse it, retap it, then go up higher, and eventually consolidate here until the next seasonal tendencies, which we're potentially going to anticipate another expansion, because consolidation births expansion, expansion births consolidation, etc., etc., with there being retracement and reversals. So what do I see? We have a weekly ERL back to IRL. Why not this IRL? Because IRL is inside of the range, and if it's out of the range, you disrespect it. We will weekly see the downside, so I'm looking for this weekly ERL to this weekly IRL to this weekly IRL, as well as we have a weekly see the downside, and that's what we have in the weekly time frame. So once again, what am I anticipating? I'm looking for this fair value gap to be disrespected. You tell the fair value gap, then go from a weekly IRL back to ERL, and then go back right back to downside. Tell the weekly ERL, eventually go back to IRL, do some sort of reversal of the IRL, then go back up here, go back higher, go to the ERL again, and etc., etc. Do that for the whole seasonal tendencies. And let's go to lower time frame for the daily time frame. What do we see currently in daily time frame? We have a daily CR to the downside, a daily ERL, this the scanner right over here, daily ERL to IRL. And why do I not care of this IRL right over here? Because this IRL is inside of CRT, so it's highly likely going to get disrespected. You can see the day it got tapped on Wednesday and it got disrespected. So that should give you a sign the market wants to go lower. And what's the next reason why I think it should definitely go down here. ERL again, back to IRL. There's literally nothing for me to prove here. A daily serial downside, and if you go back to the quoted asset to GU, we have a daily IRL to ERL. So this is, and there's an SMT by the way here. There's an SMT with this candle low. It's already SMT with this low, but if you're on the right side of the market, the SMT is not going to be there, right? There's going to be no SMT. It's going to do purchase to target. But if in the wrong side of the market, it's going to do SMTs and it's going to prevent that push from happening, which is going to reverse on your position. So that's what you need to make sure about. And especially in the lower time frame, the daily and the 4 hour and the hourly, and sometimes on the weekly. Very rarely, because that's such a high time frame. So that's why. Now going over to that's the reason why I'm going bearish. As we have a week below, we have a close below, we're looking for lower prices. We as well have another daily serial downside. We have a daily SMT serial downside. So I'm anticipating for this to be a bearish move. There's daily fair value gap and mess around here for a little bit, then eventually go on from there on end. So what I'm anticipating once again, we have a daily serial downside, daily ERL back to IRL. Why this IRL and not this candle? Because fair value gap is not a CRT. So from this daily ERL to this IRL, as well as we have a daily close below because higher prices, as well we have another daily serial downside, a daily S&P CRT to the downside. So now going to our quoted asset, which is GU. Let's go DXY first actually. Same thing, just inverted. Range high, range low, high, range low. So the past 3 months, we have been expanding. So we have been in on expansion seasonal tendency for the past 6 months. So we're anticipating some sort of retracement / consolidation seasonal tendencies, which lasts about 3 months. So that's why I'm going to take time 3-month time frame and go to a low time frame. Monthly, we don't got much yet here yet. Go to the weekly, give us that more advanced entry, more advanced technical analysis paralysis. We have a weekly serial upside, weekly ERL to this weekly. We have a weekly ERL. This week, this IRL is kind of disrespected, as I said before. So weekly ERL, looking for this high, looking for this fair value gap to get disrespected. Retest the fair value gap, then go for a weekly IRL back to ERL. You obviously go back down. Today, fuck around here for a long time, and eventually until the next 3-month candle, and until the next seasonal tendency, and going from there. So a weekly ERL, we're going to go from weekly ERL right now to this weekly IRL, which is all over here, which is overall going to inverse the fair value gap and retest the fair value gap. Eventually go up higher from here to the weekly ERL right over here. Eventually go down, eventually from down forward, go down lower. That's what we have for DXY. From DXY, we go once again to lower time to the daily time frame now. We have a daily. If we go here, for the daily time frame, go back to the EURUSD. So for the daily time frame, the IRL, there was some sort of IRL SMT here. Market did some sort, yeah. So and this time right over here, market did a daily IRL SMT with ERL with the quoted asset, which was GU. So we're going from a daily ERL back to IRL to ERL, which already got met, which is all down here. Go back in the chart, you can find it. So now we go from daily ERL back to IRL to this fair value gap all there over here, as well as this daily fair value gap got suspected. Why? Because the fair value gap is inside the daily CRT, as we have a daily CRT upside as well, which already got met. And as well, we have a daily S&P CRT with a quoted asset with GU. So we have a daily S&P CRT upside. So looking for this how to get this, we're looking for this how to get tapped, as well as daily fair value gap. Now going over to the quoted asset, which is DX for GU. On GU, we have a same thing again. Wow, this went down really low. Oh yeah, somebody made a hedge fund manager made $1 billion on this fucking shit. I thought this was like some sort of fake news, but damn, yes, somebody made money from that shit. So we have ranges, same thing. They still got purge. We want the range high, which is these 2% price points. The past 6 months, for the past two seasonal tendencies, we have been on a expansion seasonal tendency. So I'm looking for a retracement / consolidation seasonal tendencies on a 3-month time frame. Monthly, we have not much here. Weekly, we have a weekly EURL. Back to this weekly IRL. As well, we have a weekly to the downside. As well as we have a weekly EURL to this weekly IRL. So we're having a weekly time frame, weekly EURL to IRL, weekly to the downside. Now go down to lower time frame, to the daily time frame. We have a daily, at the moment, IRL to EURL, a daily CRT downside, a daily IRL to EURL should be right over here. So I'm looking for this daily IRL. The favorite already got tapped, so we're going from daily IRL to EURL, as well as the daily CRT downside. As we have for the quality asset, we have a close below because our lower prices. We have a wick above. We have wick equals lower prices. If wick above, then lower prices. If close below, then lower prices. So that's what we have for the quality asset. Now going over to the lower time frame for the market profiling. What do we have here? One thing we're going to add is market profiling. Is that we have when the market turned to a bearish order flow. This is the last low to the HTF key level. That the market tapped. This is the previous week, right? This is the new week. This is the start of the new week. It goes above this candle's high. Okay, let me see. Look for the last ticket. Okay. So this is the last low to that. This is the last low that tapped the higher key level. This right here was the biggest leg up. Now, after this weekly candle closed, so we came around. This is the last. This is the last bearish candle. Tapped the higher time frame key level. Now higher time key level, high time CRT range high. We closed below it. We have a bearish order flow at the moment right now. So we're looking for a rejection above the high. Then we're looking for a break below the lows. Looking for a rejection above any high that's gonna pop up, right? So looking for a rejection above a high, break below a low. So going to DXY, what do we have here? This is the weekly CRT low. Scan right over here. So right is the highest high at the key level. So as we close above this, then we're gonna have some bullish market profiling. We rejected below the low. We broke over the high. So we're looking for a rejection below a low. Then we're looking for a break above a high, which is gonna make market to go lower. So when this goes lower, EU goes up higher. So it's gonna probably invalidate that Friday move. I'm not sure. So as we have here, that's a market profiling for EU. So we have a bullish order flow right above this high, because if we were to look at this, this is the last HTF level, but there's a second leg here. Now the second leg that happened to the downside, which was the highest high that did a second leg, now goes above this high, we have a bullish order flow. Now going to EU, what do we have for EU here? We have this is the last little tap that tapped the higher CRT high, but this was the second leg to it. So this is the second This is the low that broke this high. So now close below this low, or this high. Then we have until you have a bearish order flow. So there's the last low. So it's the biggest leg up. Now we'll close below this low. Bearish order flow. So looking for resistance above the high, break below the low. We have an SFT above the high. We're looking for break below the low, which we did already here. So looking for resistance above the high, break below the low, but we have some sort of want to see some sort of pullback of a high to break the low. So that's what we have for EU. For the market profiling, we have a bearish market profiling for EU, for GU, and bullish market profiling for DXY. Thank you for watching. Make sure you guys like, comment, share. Down below. I'll see you guys later. Peace out.